Welcome to MDFU, Man the F Up University, where we give you all the tools to be the best man you can be. All you have to do is man the F up. What if you could become your bank? Today we're discussing just that, step by step, using an IUL for infinite banking. Using an indexed universal life, or an IUL, insurance policy to implement a strategy similar to the infinite banking concept involves leveraging the cash value growth potential of an IUL for personal financing needs. Here's how you can use an IUL to become your own bank. Understand indexed universal life, IUL. Insurance. An IUL is a type of permanent life insurance that offers flexibility in premiums, death benefits, and a cash value component. The cash value growth is linked to the performance of an underlying stock market index, like the S&P 500, but it typically comes with a cap on gains and a floor to protect against market losses. Floor. The floor is the minimum rate that will be credited to your cash value, regardless of how the underlying market index performs. This means that even if the market experiences negative returns, your cash value will not decrease beyond this minimum rate. Typically, the floor rate is set at 0%, ensuring that you do not lose any principal due to market downturns. Cap. The cap is the maximum rate of return that can be credited to your cash value in any given period. This means that even if the market index performs exceptionally well, the gains credited to your policy will not exceed this cap rate. The cap rate varies by policy and insurer, but is generally set to limit the potential upside in exchange for the protection provided by the floor. Example, if your IUL policy has a floor of 0% and a cap of 10%, and the selected market index gains 12% in a given year, your cash value would be credited with a 10% return due to the cap. Conversely, if the market index loses 5%, your cash value would remain unchanged due to the 0% floor. Understanding these features helps policyholders balance the potential for growth with the need for protection against market volatility. Purchase an IUL policy. Choose a reputable insurance company with strong financial stability and a good track record. Ensure the policy is structured to maximize cash value accumulation. This often involves customizing the policy to reduce initial death benefit costs and increase cash value contributions. Fund the policy, pay regular premiums to build up the cash value. The more you contribute within the policy limits, the faster the cash value grows. Take advantage of the flexible premium payments if needed, but consistently funding the policy is crucial for building substantial cash value. Monitor cash value growth. The cash value in an yield grows based on the chosen index's performance. Monitor the policy's growth and understand the impact of caps and floors on your cash value. Over time, as the cash value increases, it can be accessed for various financial needs. Access cash value through policy loans. Once the cash value has accumulated, you can borrow against it. Policy loans from an UAL are generally at competitive interest rates. Unlike traditional loans, there is no credit check and the loan is tax-free. The cash value continues to grow based on the index performance even when you have a loan against it, provided the loan is managed properly. Utilize policy loans. Use the borrowed funds for a variety of purposes, paying off high-interest debt, investing in other opportunities, making large purchases, or financing your business. The flexibility in loan usage allows you to function as your own bank, using the policy to manage personal and financial needs. Repay policy loans. Repay the loans according to the terms of your policy to prevent any reduction in the death benefit or risk of policy lapse. Treat the repayment with the same discipline as you would a traditional loan to maintain the health and benefits of your policy. Benefits of using an IUL tax advantages. Growth of the cash value is tax-deferred, and policy loans are tax-free. Market-linked growth. Potential for higher returns compared to traditional whole-life policies due to market index linking. Protection. Built-in floors protect against market losses, ensuring that your cash value doesn't decrease due to poor market performance. Liquidity. Access cash value without traditional loan approval processes. Control. Greater control over your finances and potential for significant growth in cash value. Considerations and risks. Policy costs. IUL policies can be complex and may have higher costs associated with fees and insurance charges. Understand all costs involved. Policy structuring. Proper structuring by a knowledgeable insurance agent is crucial to maximize cash value and minimize costs. Market performance. While there is potential for higher returns, there is also variability based on market performance. Understand how caps and floors affect your returns. Repayment discipline. Responsible management of policy loans is essential to prevent policy lapse or reduce death benefits. Conclusion. Using a yield to become your own bank can be an effective strategy if implemented correctly. It offers the potential for tax-advantaged growth, flexible access to cash value, and market-linked returns with protection against losses. However, it requires careful planning, disciplined repayment, and a thorough understanding of the policy mechanics. Consulting with financial advisors or insurance professionals who specialize in IULs is crucial to ensure it aligns with your financial goals and needs. From MDFU University, we hope this video was helpful. And if you did find this video helpful, please like, subscribe, share with a friend, and hit the bell icon to get notified about our future videos. And until next time, remember to man the F up.